All right, well, I am thrilled to introduce our speaker for today, Patrick O'Donnell. Patrick O'Donnell is a solutions engineer at R365 with an extensive experience in restaurant operations. He was the director of operations and an equity partner in a multi-location restaurant and bar concept and has years of bartending experience. As a former customer success manager at a leading point of sale provider, he specializes in POS configuration and implementation, helping clients maximize their tech stack. Patrick also has a deep expertise in inventory management and multi-location scheduling. Before his restaurant career, he owned and operated a liquor, wine, and craft and beer store. Now I'll pass along to Patrick to go over the agenda today and to jump right into the presentation. All right, Patrick, all you.
Thank you. Appreciate the introduction, and thank you everyone today for joining. And hopefully we can showcase what R365 has to offer for you. And I know that we'll have some time at the end for some questions. So the first thing that we're going to look at here is, of course, cost of goods management. Restaurants, like any other business, have two general types of cost categories. We have fixed costs and variable costs. The fixed costs are going to be just that. They're static month over month for the most part. And there'll be some variables. Maybe you pay a percentage of sales in rent, or you'll have some CAM charges that might fluctuate. Utilities might go up or down in the winter or the summer, depending on the region of the country you're in. But for the most part, these are largely out of your control as a business owner and viewed as fixed overhead. Our variable costs, cost of goods and labor, are what we often refer to as our controllables. These are where you have the ability to influence your spending, and R365 can play a significant role with you in that process. Some things that will present challenges to that control are rising cost of goods, tracking waste and entering that into a system that accounts for it, rising labor costs, time-consuming financial processes and reporting struggles, and then a lack of visibility into how you think your week's going to go, your month, your quarter, and ultimately your year. Some ways that we can overcome these challenges are building out a budget per location, leveraging automation where possible, monitoring your cost of goods more closely through reporting, and then building out schedules that factor in your forecasted sales with your predicted labor. Restaurant sales will always vary and can often be difficult to predict. This can lead to over-ordering, wasting product, being too conservative and under-ordering, which is not only a huge opportunity cost and loss of revenue, but from that would-be sale, but it also creates a poor guest experience and can have a negative impact on future sales as well. So to combat these things, we're going to have smarter financial management tools within R365. Where we'll begin is looking at a digitized invoice from a company like Cisco. You can see that on my top of my screen. We'll pull in all the information from that paper invoice that someone in the back of house is receiving and hopefully checking off to make sure items weren't damaged or left off by the driver or broken, or maybe you needed to send them back because you don't actually need it and the person doing the order didn't do a great inventory check. We'll pull in all that information up top: net terms, due dates, when it's making a post to your GL. And then for every single item that you purchase, we'll map that to your chart of accounts and give you a specific item category cost. So later when we look at a profit and loss statement, we'll look at meat cost against meat sales, grocery costs against grocery purchases. If you're buying chemicals, you don't ever sell those to guests, but it is going to come in on your invoice. And if you don't account for it and separate that out through a different item category, it's going to increase your cost of goods. Last thing on this invoice is going to be these line items that are highlighted in orange. This is going to let you know of any price fluctuations. That can be a percentage that you set per item category or a specific price that you set per pound of any given product. As soon as it goes above that variance, we'll let you know about it here as an alert. You can also run a report that will comb through every single invoice from whatever date range you want to run it for across as many locations as you'd like to pull. And you can see on my right-hand side who the vendor was that you received the product from, what the item was on the left-hand side, when you purchased it, and how much of a variance you had, either as a percentage or as a dollar amount. A few other strategies to help you reduce costs and improve your margins. Within your point of sale, every single time you press an item, whether it's an appetizer, an entree, a dessert, or even a mixed beverage or an alcoholic drink, it's going to be mapped to a recipe that has that item's ingredients broken down from the pack size to the ingredient measurement that you sell it for. You can see here on my screen that we're talking about a brisket taco. I have all the ingredients here on the left-hand side that go into this item, the unit of measure for each product, and then how much each one of those things cost. Now, we're getting pretty granular here, measuring out lime wedge costs at less than a penny. What we really want to start with is center of the plate and build out. Let's track our proteins, our high value items, and then you can get more specific from there. But I do want to know that my 2 ounces of brisket cost me $2.26. And I can also set up a yield for any losses there, whether that shrinkage, trimming, whatever that may be, whatever your yield is for a product, it can account for that in the item cost. So every time I sell a brisket taco, I know that it's costing me $2.74. From a training perspective, whether that's new people in the kitchen or I have a new menu item, I have an LTO that's arriving, I want to put the instructions on how to assemble and plate that dish, and also what it's supposed to look like as a final product. Everyone should be making each item the exact same way, whether it's Monday morning or Friday at happy hour. That cost is going to feed into this column here. We'll continually update the cost, either every single invoice or an average of your last 3 invoices, so that you have a live updated menu item cost without having to manually enter anything. To the column left of it, we'll tell you what you average sell it for in the point of sale. This will take into account any discounts, happy hour. So my 1304 versus 281 versus 1331, I'm comparing what I sell it for across locations, what it costs me to make at each location, and then this menu item analysis report will automatically calculate your margins, your cost of goods percentage, how many you sold of every menu item, and the amount of money that you made from those sales. Each report that I'm showing you here is customizable. You can choose to run it for one location or several in whatever date range you choose. Tying into selling product is also moving it between locations and wasting it at any one of those locations. First, looking at transfers on the left side of my screen, you can see that I'm moving 4 cases of limes from my Irvine location to my San Diego location. I also put in a note there of why I'm transferring the product. If I were to click on this distribution word here, it's going to show that I'm automating a due to and a due from process. I'm moving not only the inventory of limes from Irvine to San Diego, but I'm also moving that $435 as a cost from one location to the other. We often see that restaurants that have larger storage areas are going to take the blunt of those transfers. You can always pull from the location that has more storage area. How often are you really replenishing either the product itself or the money of that product? On the right-hand side, waste logs are going to look very similar in practice to transfers. You can search through your entire catalog of category of items right here, and you can waste a product in the actual form in which it was wasted. I'm looking at beef brisket here in 3 different forms. First, I'm wasting it as a vendor item. It costs $4.15 a pound. Next, I'm wasting it as a prepped item. This is smoked, seasoned, and that's $4.49. And then finally, I'm wasting it by the each. This is a menu item that costs $2.75. I have a total price that I'm wasting for each product. And I can also put in a comment so I can show my management or even for historical records as to why I wasted this product in the future. Everything that I've just showed you is what's going to tie into our actual versus theoretical report. It's essentially a report card on how efficient the restaurant's been and where your product's going. Waste logs are going to be here in green. Transfers are also here in green. And then up here, my beginning and end balance are going to be inventory counts. I did an inventory count on the 27th. That's my beginning balance. I did another one on the 3rd. That's my ending balance. Between those two dates, we'll pull in every time you press a button in the point of sale and sell something, it's mapped to a recipe. Every time you approve an invoice, it's going to add to your theoretical on hand. And we're going to compare our beginning balance, our ending balance, and see what our quantity usage is. My actual, my 166 here, is going to be based on my inventory counts and my invoices. My 129 is going to be based on my recipes and point of sale buttons. I should have used only 129 pounds of avocados, but my inventory counts say I used 166. So my variance is 37 pounds, and that costs me $108 every week, and I have a 77% efficiency level. Had I had some waste entered in this column or some transfers in this column, my unexpected variance would be whatever is entered here, subtracted from that total. I'm still wasting it, but at least I can account for where it went. I want to use this 77% efficiency and increase it as high as possible. Of course, we're never going to get to 100. And sometimes categories are even over 100. There's a reason we're growing product. We're pulling from the wrong item. We're not recipe tracking correctly. I want to be consistent week over week. When I drop, I know I have some change in the kitchen or some change in my apportioning. Moving on now to labor optimization and how we can save time and money from a labor perspective. We'll do that through forecasting, building efficient schedules, and then comparing the same way we did with product, your actual versus your scheduled, your actual versus your theoretical. Forecasting is going to take your historical sales data and say, well, for the last 15 Fridays, you've sold an average of $7,200. So this upcoming Friday, you're probably going to sell $7,200. Of course, there's going to be some variances there. You can never predict what you're going to sell in the restaurant, but the best predictor of future outcomes is past behavior. I can factor in the weather. It's going to be a rainy day on Friday. So if I want to go back and eliminate any outliers, either as spikes or dips in sales, or just eliminate any sunny days to get a better average going into Friday, I can do that. You can see that I'm projecting to do 36,000 for the week. We're going to pull in the weather based on the zip code for each day of the week. And down here on the bottom, I can see that I have a Valentine's event coming up for this Thursday and Friday. In this column here, I can see what I'm forecasted to sell compared to last week and from the same week from the previous year. If I do need to make any adjustments, I can do that here with this blue sliding scale. I can make an adjustment as a dollar amount or as a percentage. My scheduling tool is going to read directly from my forecasting. On the top left-hand corner here, circled in red, you can see what you're projecting that you're going to sell based on historical sales days. And then if you stick to your scheduler as you built it out, this is what your labor cost will be. I'm going to have a 20% labor cost. It's going to cost me $8,000 unless I make adjustments in the week as my sales are coming in. So I can look at a day like Tuesday. I have $5,900 expected. My schedule built out has $1,500 worth of employees on the clock. That's based on their job codes and pay rates. If I stick to the schedule, and if I sell about $6,000, I will end the day at 25% of labor. My goal for the day is 30%. That's why it has a variance of 4.8 on the bottom. Each day as a manager, I'm going to have a different approach. Wednesday, I know that I'm understaffed. So I either need to have people stay late or I'm going to take a couple sections to help out during those rushes. If I need to add any shifts, all my red employees here are approaching overtime. So if I do need to assign this server shift because it's an unassigned shift, if I put that under their name, it's going to give me an alert. They will go into overtime for X amount of hours. On the R365 app, everything that I've showed you so far is visible. This can be on an Android, iOS, or it can be on a universal tablet that everyone has access to in the restaurant. Each employee is going to have their own username and login, so you can track exactly what they're doing, when they're doing it. It's free to download, and you have unlimited users that can be in the system. The scheduler can allow for multi-location management. You can swap shifts by job code with manager approval, of course. It will give you alerts into overtime or labor law violations. You can send out company-wide notifications, and you can also monitor in-staff communication. So if you're currently using iMessage or any other service that's not tied to the point of sale and employment records, you're always going to have those employees that you forgot are no longer with the company who are still in that message system. You can also control who has access to whose phone number. We're not sharing phone numbers here from front of house and back of house. It's all handled within the app, and the manager can see any communication if they need to go in and investigate. Once staff have clocked in and you've built out those schedules, approved the daily sales summaries, you can now analyze how you performed in terms of labor percentages. Compare your actual sales against your forecasted, your labor percentage goals against what you had scheduled, see how many people had break rule violations, who's in overtime for the day, the week, and how much do you have to pay out to them. In the top right-hand corner, one option that we have to help combat this is schedule enforcement. R365 can push the schedule back into the point of sale, which restricts early or late time punches. That can be as specific as you like. You can do 10 minutes before a shift and 35 minutes after a shift. If it's outside of that window, they can still clock in or clock out. They just need manager approval to do so. The culmination of all the reports and all the invoices and all the transfers and waste logs is going to be the profit and loss statement. We have all of your legal entities and instances within one system, so you can run a consolidated P&L across multi-locations. Here I have 3 locations. This can be as many as you have in your network group. Automated journal entries based off the daily sales summary are what going to allow this to be an updated P&L on a daily basis. We'll make one journal entry on sales, highlighted here in the top left-hand corner in green. And then my salary and wage positions, I'll have another journal entry based on labor. Utilities, rent, CAM, triple net, cell phone bills, all of those can be accounted for here, and you can spread them week over week, or you can allocate preset percentages across locations if you have shared expenses or assets like a company vehicle or marketing fees. Lastly, we also have the ability to get away from looking at the year from a traditional calendar perspective, and you can set up 13 4-week periods or any combination of a 4-4-5 so that you're able to look at Monday through Sunday in a 4-week group, as opposed to looking at June versus July of the current year, or even July of this year to July of last year, which may have 6 Saturdays one year and only 4 or 5 Saturdays in the next year. Next, I think we are up for a poll from the audience.
We do have a poll. 1 second while I go ahead and
Sure.
up there. All right, so we're just seeing if anybody wants to have a little demo request poll here. Would you like to learn more information about Restaurant 365? I'll go ahead and leave this up for a little bit here so we can get everybody's answers in. Okay, just a little bit longer. Still have some answers rolling in, so we're just gonna leave it up for a little bit longer. Thank you, everybody, for participating. All right, I'll go ahead and close this out. Thank you so much, everybody. All right, and since we're done with that poll, let's go ahead and jump into our Q&A. We only have a few questions here, Patrick, but I think these are good ones for you.
Sure.
So the first one is, and I believe this is from the menu analysis or menu item analysis report slide. What is the difference between a star, puzzle, dog, and opportunity?
Yeah, great question. So each one of those things are going to be based on your own menu items compared against themselves. So your stars are going to be the things that you sell the most of and you make the most money from. You want to continue to push stars because they're good revenue boosters and you have good profit margins on them. Opportunities are going to be things that you make a lot of money on, but you don't really sell that much of. So let's incentivize staff to push those, whether that's a table tent or that's the special of the day. Dogs are going to be things you don't make much money on at all, and you don't really sell them. So why are they on the menu? There could be a good reason for that. It's a dietary restriction that you want to keep certain guests happy with. It's a children's menu that isn't utilized that often, but you know that you need to have parents coming in and need to have that children's menu available to them.
Perfect. And then we've had quite a few rolling in right now, actually. So where do I go to control the time punches so staff don't clock in early or too late?
Got it. Yeah, so that's going to be on schedule right back. And that is in the location settings. You're going to go to go to the specific location that you want to look at, and then click that on POS integration settings. And then you can toggle on the ability to have schedule right back. I can put a link to that in the chat if that's helpful.
Yeah, that'd be great. All right, sorry, we have quite a few questions rolling in, so I'm just trying to organize them. Somebody said we already have R365, but we're not using it as we could. How do we get that training?
Sure. So a few different ways that you can get training. One is, I can move my schedule over here. And so firstly, this is where schedule right back will exist. And I'm going to access this within the R365 support page. So I can just type in schedule right back, and it's going to show me the point of sales that allow for that, and then where exactly that's going to exist in my instance. So I can go to labor, go to scheduling, and then you can set that custom schedule right back time. So I want 5 minutes beforehand and 15 minutes afterwards. In terms of ongoing education and training, one, that can be something that someone hops on a call like this and you have a live person that's going kind of redoing a portion of your implementation that maybe you weren't around for or that you'd like a refresher on. The other option is that you can come in here and search by any item that you like. So if I want to look at, how can I view a profit and loss statement, it's going to pull up several articles that give you some more information about that. The other option is that within your R365 instance, you can click here into the R365 Academy, and it will pull up dozens of videos that are 3 to 15 minutes in length, and they have quizzes and lessons associated with them. You're not going to have to sit through hours of videos on unrelated topics. You can really pinpoint the area in which you want to learn more about.
Perfect. And then another question, will the smart schedule work with our Toast POS system?
Yes, it will. If you're using our scheduling, it can push that schedule into Toast. And when they clock in the point of sale, it will restrict their clock in by whatever time restrictions you set up.
Okay. And then how do we export our schedule and import into the POS? Is this an integration?
Yeah, so if you're using our scheduling, it will push back into the point of sale via that API integration. You don't need to export that.
And how do grocery receipt purchases get imported?
Great question. So we have an EDI integration with the big broadline vendors like Cisco that I was showing as an example. The other option is using Capture AI, which utilizes an OCR technology, optimal character recognition. So you have the option of taking a picture of that invoice, that grocery receipt. You can fly open your camera on the R365 app. It will read all of the items on that receipt and map them out the same way it would from the Cisco invoice. The second option is giving your R365 email address to your vendor, and they can email that receipt directly to us, and we'll read that with item level detail as opposed to taking a picture of it.
Okay. And then another question, do we integrate with our Power POS system?
I'll have to check my integration list and see if that's on there. R power,
Yes,
like the letter
like
R.
the letter R and then Power, POWER.
Yes, we do.
Wonderful. Can you define a simple method for determining the assumptive tax insurance benefits added to labor to express all in labor numbers on our schedules?
Yes, so we're going to use a placeholder of what your tax percentage is based on the state in which you operate. I'm not sure how detailed you'd like to get there, if we're talking about just taxes of hourly employees or if we're talking about calculating salaries and wages. It's definitely a more detailed question that would depend on the state in which you're running payroll and what kind of allocations you have.
Sorry. What is the best report in R365 to track the sales of each product, and how can I analyze the reasons for increased spending?
Got it. Okay, so the sale of each product, it depends on the utilization of R365. If you are a business intelligence user, then that's going to give you a lot of ability to drill into sales either by location, by menu item, by modifier. If you are not utilizing business intelligence, it is an add-on to the software. You can run PMIX reports. You can run the menu item analysis page that we looked at that broke down cost versus what you sell it for. It would also tell you how many you sold of that item. So that would be a great report to use, but the PMIX is something that I would definitely rely on most heavily.
All right, and then next question, can you explain how to spread expenses across different time periods? Can you run a report that does that automatically, or do you have to create a JE?
Yes, so if that is something that is predetermined, you can set up those allocation percentages to spread an expense across multiple weeks, periods, years, locations, legal entities. You can even go back retroactively and unlock closed periods if you need to spread something. Or it can be individually if it's not something you thought of spreading, you can go in and enter a journal entry and do that manually. Right from the invoice, you can toggle on use preset allocations. So if something's coming in that you don't always want to spread, but you saw it on the invoice, you can do that ad hoc as needed.
All right, great. And then our final question for today, is there a report that will calculate food costs based on gross sales?
Yes, so our profit and loss statement is going to do that automatically. So if I go back to, I think, well, it was on one of the slides, so it wouldn't be active, but yes, on the profit and loss statement, it's going to do that automatically. It's going to tell you the numerical or the dollar amount that you had from every single item in every single sales category within that item. And it's also going to break that down as a percentage against net sales.
Okay, well, that concludes our Q&A session. Patrick, if you want to reshare the presentation, we want to show them a slide about some events that we have coming up.
Absolutely.
All right. Well, thank you, Patrick, for your time today. Before we wrap up, I want to share this slide for those interested in hearing more from industry leaders. We'd love to see you at our restaurant transformation tour. Our next stop is in New Orleans on March 17th. This one-day event offers tailored sessions for different restaurant roles, providing a great opportunity to connect and learn. So you can go ahead and scan the QR code on the screen to learn more, and we hope to see you there. All right, everyone, this concludes our webinar. You will receive an email with a link to download a recording of the webinar to listen to again or share with your colleagues. Thank you again for joining, and we hope to see you soon.